Eric Mwathe at Mwathe.com with world market analysis for the weekend of July 2nd and July 3rd, 2016. Let's take a look at markets here. We see pretty much, for the most part, we can say a nice close higher for world markets on Friday. As far as Asian markets are concerned, European markets also did trade higher on Friday. And you can see a nice gains pretty much across the globe for the major European markets. The Americas right now, let's call it positive, slightly positive. So nice move to the upside. We take a look at the US with about half a trading session to go, and unchanged to positive for now. Gold is up about 1.4. The VIX is down back to $14-15, down about 5%. Let's take a look at those world charts. We begin by taking a look at the Australian market. The one thing I would like to do is go back to the previous analysis. Keep in mind, late last week and early this week, markets were down worldwide substantially, but we were talking about the possibility of support based on RSI work. You can see, if you take a look at the Australian market, it was pretty much coming back to test this line here, where we can see that this was possibility of finding nice support here, and also coming off the lows. We can see that this is where we made lows for this year, and we had come off this level here in the RSI that began this move, in the RSI coinciding with this price move. So we drew a line from there, and you can see that our speculation that the market could come back and test this and hold based on the previous support on the green line here, coming back to do the same thing here, we were expecting a bounce. So that makes sense that we've seen the market recover. In fact, most daily charts that we discussed last weekend did bounce based on this type of analysis. Now, what we're going to see for this at the end of this week is markets are coming back now to test the top side of their resistance across the globe. You can see coming back to test the price channel here. I guess I can draw it somewhere like that. Coming back to test that, and also the RSI is coming back to test the top side. So I think what the markets are trying to show us here is, until they can clear this daily resistance, now that we've had a nice recovery this past week, we seem to be indicating that for the most part the next swing trading market is going to be lower. If we take a look at the Chinese market, you can see it continues to trade in a range. So this one is range bound and has been range bound for a couple of weeks, couple of months here. Until we can move out outside of this wedge, we should expect to see this market still trading sideways for the most part. And of course, a breakout above the wedge would be bullish in terms of price and RSI. And of course, if we fail to break out and eventually if we break down below the wedge, that's when we are going to see the next swing trade being lower. Right now, seems sideways as far as I can tell. If we take a look at the Indian market by way of the Nifty, we can see that this past week it managed to move above the recent weekly closing high. So on terms of price, this is a bullish argument that the stock is clearing resistance. The level we were watching here, and one we can continue watching, is 8220.80. So right now it is holding above that, so we can say for now it's a good reaction here. As long as it holds above 8220.80, that's a breakout. One can continue being positive as far as the market is concerned. Of course, if we move back below this number, that's going to be a short-term failed breakout, which might be bearish. Now, that's the bullish argument. If I can show you the bearish argument, and we go to the 3-year weekly, it's the same level we've been watching. So this level here is being tested. So the previous break off the highs of 2015 is what is being tested. The break in RSI coincides with the price coming off the highs there. We've been watching this level for potential resistance. As you can see, we are still in this range. Now, if we begin and show resistance this coming week, any type of resistance on this red line might suggest that around here one can start expecting some type of a strong pullback week to week. Keep in mind, this red line so happens to be at about 61.8 on its weekly RSI. So we know that resistance on this level might lead to some type of a serious pullback. At the same rate, the best thing to do here is to watch and see whether it can continue holding above the current breakout level, again at 8220.80. Anything above that is okay to consider this a market that could move higher. But if we show resistance on the RSI as discussed here on this line here, resistance on that RSI level, and also if we show that it is back below the breakout level in price, that's going to be our indication that now the market has changed direction and wants to go down. If you take a look at the daily for the Nifty, we can see that we were expecting potential for support because it's been bouncing on the 50 RSI level for a nice recovery. All this period here, it's been coming and showing uniform activity bounce back above the 50 RSI level, and it did the same thing this past week. So this last couple of days moving higher was consistent with our analysis this past weekend, and now we can see that it is again another market showing it is coming back to potential resistance level on a day-to-day basis. We are making an improvement in price highs on the daily, but the RSI has not moved much to the upside. So this type of negative divergence might set the stage for a market now that wants to pull back. And in fact, you can see confirmation of this because the Nifty hourly is showing the price moving to higher highs, an improvement in price highs, but the RSI is not necessarily making a new high, or at least moving higher. So this is negative divergence again that sets the stage for a pullback in my opinion, and also coming back to show resistance somewhere around here. This RSI line, this red line, corresponds to the break of the recent highs here that led to the shallow pullback. So those two lines do indicate that more than likely hour to hour, and you compound that with the day-to-day analysis, more than likely again we are looking at markets that are pointing to a potential pullback after a nice recovery recently. Now if we take a look at the Japanese market, it does present a very strong argument for markets that want to go higher as long as this line is holding. So we had an improvement in the RSI while prices made a slight lower low on the weekly. That line, that positive divergence, set the stage for a nice recovery this past week. So as long as this RSI is holding on this weekly chart, we can expect that week to week this market is still pointing to the upside. In fact, if you take a look at the monthly chart, if this market can turn positive for the month, show something like this on the RSI, if it can turn positive for the month, you can see that this corresponds very nicely with the previous entry. On the RSI, there was a breakout here. That breakout was instrumental in bringing the market off the levels here in 2012, late 2012, early 2013, and the market went on a major bull run. So we are coming back to test that level, which is somewhere around here. And so what I'm getting at here is if the market can continue showing this look, and if we can form a nice double bottom on this green line, then one can expect that month to month the equation has changed here and that the market could easily move higher. So this is a very strong argument for a market that could recover as long as the market can be positive this month and probably even in the coming month or so. If it can show double bottom support here, one can expect a major recovery and potential for a recovery after coming off the lows. This double bottom might set the stage for a strong move higher in the coming months. And of course, if we don't hold that green line and if we break through that green line, then that is when we can expect a continuation of this recent move lower. If we take a look at the South African market, it also did recover this past week, which is consistent with our previous analysis because the market was coming back to test this line. And of course, we can see that it held as we were expecting potential for support. So the recent rally this past week is consistent with this support we were expecting. And also we came back to challenge this entry off the lows. So there was a line we drew from there. And again, it also held, as you can see here. So the recovery this past week is consistent with that support. Now if we take a look at the hourly, and this is something we see in many markets, this is now asking a question as to whether we have come back to resistance. There's a price channel here that is being tested on the hourly, and also coming back to test the recent break on the RSI. So there was a break here, markets coming back to test that level. And there's also a test of the hourly topside line. So those two lines here, if you take consideration of the price showing potential resistance here and the RSI showing two lines of resistance, as long as we confirm resistance here, one can expect the next swing trade to be down. And this is something I see on many charts, especially on the hourly, that markets are indicating they want to pull back. Of course, if we see a breakout above this line here on the price and a breakout above this RSI resistance levels, then we can expect at least that market has cleared resistance and should have free will to move higher. Until we can see that, I still lean to the idea that now the swing trade that is probably going to take place is more than likely to the downside. Take a look at the French market, and also it came back to show support on the RSI lows line, as you can see here. And also, just like we've seen other market, this line off the lows, this RSI movement, we can see here another reason why the market did recover. And also don't forget that there was a slight negative or positive divergence, I'm trying to say. Markets made a slight lower low, but the RSI showed an improvement, and that positive divergence set the stage for a recovery. So that makes sense that we saw markets move higher. In fact, you can also see the same thing as far as the German market is concerned on the daily. The recent bounce is consistent with lower lows in price, while the RSI showed an improvement. Keep in mind the RSI had come back to show support on the same line right there, and also coming off the lows there was a line here. So those lines did indicate a bounce. Now if you take a look at the FTSE, and go to its daily chart to see the same type analysis, it came back and did show support here below the line and back above it for nice support. That's one reason why it bounced recently. And also it did come back to test this line here. This green line is the line off the lows, this entry in the RSI. That price RSI movement coincides with the prices off the lows here, and every time we bounce on this green line, the market has had a chance of moving higher. Here we can see uniform activity below the green line, back above it, and here this Monday I believe we bounced on that line for another uniform activity support. So right now what we're looking at here is, in my opinion, one can say that there is a slight breakout, and that breakout needs to hold. And that's the bullish argument, that this is a good breakout day to day. The only problem that I see, it's coming back to test a recent break level, and I'll show that in a second. So this RSI did break down here, and that break right here, this break did bring the market lower. We can see that led to a pullback. We are coming back to test that level. I suspect that this could also be a problem. So short term, after a nice recovery, most of these charts, in my opinion, are leaning to markets that want to pull back unless they can clear the resistance on the RSI. So this is a problem here. So that's one of the bearish arguments. The other bearish argument is, I would say the market did make a higher high in price, but the RSI really has not shown that much of an improvement. And I think that negative divergence might set the stage for a pullback, in my opinion. The Canadian market was closed on Friday, so this is Thursday's close. We still see that it has a chance here of breaking out above the recent weekly closing high there. So the level to watch for a breakout, and a breakout would be bullish of course, is this level here at 14,226.78. A breakout above that level would be bullish. 78. Now that's the bullish argument that a breakout would push this market higher. The only problem is we've been seeing resistance and expecting resistance every time this market has come back to this RSI red line. This red line happens to be at about 61.8. We've been unable to move above this level since the highs of late 2014 or 2014. You can see we've been finding it difficult to move above this red line, and even recently we've been bouncing on this line. So resistance week to week on this RSI line might indicate that we can expect a pullback after a nice recovery this past week. And on the hourly, to be consistent with other charts and markets across the globe, on the hourly we can see that it is coming back to test a level that could be a problem. This recent break in the RSI brought a pullback in the stock or in the Canadian market. We draw a line from there. You can see that this was a problem short term for this short-term highs, and we did close the week exactly on that line. So resistance on this line again might indicate another market that is pointing down for a swing trade. Now if we take a look at the Brazilian market by way of the ETF that trades in the US, EWZ, we can see that it is doing its best to break out above the recent weekly closing high there, and the level we can watch is 229.29. Staying above that is bullish for this instrument. So the weekly chart is showing potential to break out. If it can hold and continue adding above this level, that could be a bullish development, because over the last 5 years plus, this market has really been one of the worst performing markets. As you can see, it's been drifting lower. So a breakout and holding above 29.29 might indicate a possibility that this market also wants to change its direction after multi years of underperforming. This might be where it starts changing direction. Now that's the bullish argument, that it needs to hold above 29.29 to continue moving higher. If we take a look at the RSI on the weekly, and this is a 5-year weekly chart, we can see that this is where it broke down in 2014, which is off the highs there. We draw a line from there, and you can see that it is coming back to test that level. If it shows resistance on this red line, one can expect that the next swing trade is down. In fact, if you take a look at the daily, there is evidence, in my opinion, here that this is potentially looking to pull back. So we are making an improvement in price highs, but the RSI is not showing any improvement. So in my opinion, this could be a problem. So that's one layer of resistance that could present a problem. And we can see confirmation of this in yet another hourly chart, because here we are making a slight improvement in prices. Slight improvement, but the RSI is not following through. So in my opinion, given all that we've seen, the nice recovery based on the daily charts from the last week's market analysis, the bounce this week did make sense. But now, to conclude this video, it seems like the hourly charts and the daily, so the hourlies and the daily charts in many markets are pointing to the possibility of the next swing trade being lower after a good recovery this past week. Eric Mwathe, Mwathe.com. As always, good luck, peace, and blessings. ESS. Mwah.